Alphabet's AI strategy, defending Google's search dominance against rising competitors. The tech world is entering a critical moment where Alphabet, Google's parent company, faces intensified competition from emerging artificial intelligence rivals, and investors are watching closely to see how it responds. But here's where things get truly intriguing. While Alphabet is known for its powerful search engine and dominant advertising networks, newer players like OpenAI and Perplexity are challenging that supremacy in ways that many might not fully appreciate. How will Alphabet maintain its edge as these AI upstarts attract millions and seek to redefine browsing and searching as we know it? Alphabet's logo, famously seen stamped across countless digital landscapes, now symbolizes a company gearing up for a fierce battle in AI innovation. These challengers are not just launching new products. They aim directly at Google's core, the search ecosystem and browser dominance. OpenAI and Perplexity have successfully drawn tens of millions of users to their AI-powered platforms, with ambitions that include toppling Google Chrome's widespread browser usage, a move that threatens to chip away at decades of market control. On top of this, a U.S. court is even considering legal action that could force Alphabet to divest Chrome, further amplifying uncertainties around its monopolistic grip. To combat these pressures, Alphabet is doubling down with new AI-driven features like AI Overviews. These tools present AI-generated summaries atop conventional search results, a feature already engaging 1.5 billion users monthly. This blend of AI and traditional search is strategic. It enhances the relevance and attractiveness of Google's ad offerings, potentially boosting performance for advertisers seeking to maximize their return on investment. Moreover, Alphabet has expanded access to its advanced Gemini AI models for business clients, signaling a commitment to embed AI deeply within its enterprise offerings. Another strategic move came in March, when Google incorporated advanced AI capabilities directly into its search. Adding to this, Alphabet recently landed a significant cloud computing deal by bringing OpenAI on as a client, an ironic twist given their rivalry in AI, strengthening Google Cloud's footprint while fueling AI development. But here's the part most people miss. Despite Alphabet's formidable defenses, the competitive landscape is evolving rapidly. Wall Street has been eager to see tangible returns from big tech's massive AI investment spree, which is projected to hit $320 billion this year alone. When Alphabet reported first-quarter earnings earlier this year, its AI-driven growth exceeded expectations, reassuring some investors. Still, the launches of AI-powered browsers by OpenAI and Perplexity raised difficult questions. Can Google maintain its dominant share of online searches, particularly when users have alternative interfaces that offer richer AI interactions? Analysts, like Gil Luria from D.A. Davidson, warn that although search volumes may decline as these new browsers grow their user bases, the real danger lies in losing advertisers to these platforms. After all, Google's revenues hinge on ad spending, not just search usage. Adding another layer of complexity, Alphabet's autonomous vehicle unit, Waymo, is gaining fresh attention. Often overlooked in earnings reports, Waymo's progress in the self-driving taxi space in the United States pits it directly against Tesla's emerging autonomous fleet in Texas, led by Elon Musk. This rivalry could draw more focus on Alphabet's broader tech portfolio beyond AI search. Looking ahead to Alphabet's upcoming second-quarter results, expectations are cautiously optimistic. Analysts predict approximately an 11% increase in total revenue, with a 7.5% uptick in advertising revenue and a robust 26.2% growth in cloud computing. Earnings per share are forecasted near $2.18, adjusted for any one-time charges. Despite these promising figures, Alphabet's stock performance this year is relatively flat, falling behind many of the so-called Magnificent Seven megacap tech giants. By contrast, NVIDIA leads with a striking 28% gain, while Tesla experiences notable declines. Yet, among 55 brokerage firms, Alphabet is broadly rated a buy, supported by a median price target north of $200. So here's the pressing question for you. With Alphabet's dominant market position seemingly under siege by bold AI newcomers and legal challenges, do you believe the company can leverage its innovation and vast resources to stay on top? Or is this the beginning of a profound shift where traditional tech giants lose their crown to agile, AI-first challengers? Share your thoughts below. Are we witnessing Alphabet's reinvention or its reckoning? Alphabet, GOGL, earnings preview, AI initiatives, ad performance, and tech spending. Alphabet's Q2 earnings preview, a critical test for big tech's AI ambitions. As the first major tech giant to report second quarter earnings on July 23rd, Alphabet, GOGL, is about to give investors crucial insights into the state of AI innovation, digital advertising, and enterprise technology spending. But here's where it gets interesting. Bank of America's star analyst Justin Post, ranked in Wall Street's top 1%, has just raised his already optimistic projections for Alphabet's core search business. His confidence stems from observed improvements in spending patterns throughout Q2, supported by favorable macroeconomic conditions and positive currency exchange impacts. Post's revised forecast now calls for $81 billion in revenue and $2.21 earnings per share, exceeding his earlier estimates of $80 billion and $2.15. These numbers surpass Wall Street's consensus expectations of $79.5 billion and $2.15. He's particularly bullish on search revenue growth, projecting 11% year-over-year expansion versus the Street's more conservative 9% estimate. The cloud division is expected to generate $13.2 billion, slightly above consensus, potentially boosted by recent workspace price increases. However, here's where things get complicated. Alphabet's hiring patterns send mixed signals. While Q2 job listings jumped 14%, suggesting renewed workforce expansion that could pressure margins, the company maintains its voluntary buyout program, indicating ongoing cost management efforts. Post identifies several potential catalysts for positive surprise: strengthening ad spending trends since April, robust search performance demonstrating successful AI monetization, and possible YouTube outperformance against easier year-ago comparisons. Cloud services could provide additional upside through expanded capacity and growing adoption of workspace AI features. But here's what investors should watch closely. Paid click growth metrics in the 10Q filing will be crucial for search sentiment. Despite industry indicators suggesting slightly slower click volumes, Post emphasizes strong monetization trends. He expects 2% year-over-year paid click growth in Q2, accounting for Q1's leap year effect. The market will also scrutinize updates on AI mode integration, Gemini adoption, capital expenditure patterns, and developments in the OpenAI partnership. And now for the controversial part. While Q2 results look promising, Post warns that the real market-moving event could be the Department of Justice's search antitrust trial verdict, expected in early August. This legal uncertainty might overshadow positive earnings momentum until resolved. Nevertheless, Post maintains his bullish stance, reiterating a buy rating with an increased price target of $210, up from $200, suggesting 10.5% upside potential. The broader analyst community shares his optimism, with 29 buy ratings alongside 9 holds, resulting in a strong buy consensus. The average price target of $206.51 implies roughly 8% upside over the next 12 months. What's your take on Alphabet's AI initiatives and the potential impact of the antitrust trial? Share your thoughts in the comments below.